Hi, and welcome to another episode of Monday Market Outlook. Let's look at what's in store for us this shortened trading week. 3 days for the local market and 4 days for the global markets. Now, 3 days assuming that the president doesn't declare in the last minute that Wednesday is going to be a holiday, right? The PSEI closed Friday at 6,500, a big drawdown mainly driven by not so good earnings from JGS and Monde. JGS earnings mainly dragged by their petroleum business, and Monde's earnings greatly affected by their artificial meat product. You know, during these inflationary times, your artificial meat product is more expensive than the real thing. I mean, I'm not gonna buy artificial meat if it's more expensive than the real thing, right? So looking at the PSEI chart, we were expecting the market to rally and challenge 6,700, but it fell short because of the big correction on Friday. So the market has now ended below our critical zone here at 6,550, ending at 6,500. Now, at this point, the market has formed a lower low and is formed a lower high. This sets it up for a possible lower low formation here, but hopefully not. Hopefully for the next 3 trading days next week, we could hover at around the 0.38 fib and possibly retest 0.5 fib at 6,400 and hold there for a double bottom, which could set this up better for another test of 6,700 resistance. So some of our traders may be doing peso cost averaging, and having gotten your salaries, you're trying to allocate funds to invest in the stock market. I would suggest looking at how the stock market performs in the next few weeks, because the market might dip further from its current levels and retest 0.5 fib. So you may want to wait for that to happen before getting some shares. Last week, we've had some dividend announcements. We have GMA announcing a whopping 1.96 peso yield per share. That puts that 1.96 peso yield, that's 16% of its current price at 12 pesos. Now, you know, GMA doesn't have a competitor. Look at this gap fill here. Look at this gap fill. We may see GMA potentially hitting 1550 by the end of the year. I mean, they're all alone. They don't have a competitor. So we may see GMA slowly climb and fill these gaps. Other dividend announcements, what we've been waiting for, Semirara announced their dividend. Another whopping 350 dividend that put its trailing 12-month dividend yield to around 22%. Now imagine if you've been holding Semirara, the dividend alone gives you 22% upside. After its dividend announcement, the stock popped and hit its resistance here at 33. Now it's settled at around 32.20. Now usually after the X date, now remember the X date is on April 5, right? So back in October when that happened, there was a big gap down and then the stock capitulated to around 28 before it found support there. This may not happen the same way this time, because I think the valuations for SCC are pretty attractive at this level. And comparing SCC before, SCC was probably a bit overvalued during that time. So DMC also came out with their announcement, dividend yield of around 72 cents per share. The X date is further away on April 12, so we may see DMC consolidating at the 1150, 1160 level before retesting its support here at 1060. Despite the drawdown last Friday, some of our stock picks did perform well. A-REIT gaining 1%, Bloomberry, our dark horse pick, up 6%, DNL up 2.5%, and Apex Mining up 2.9%, right? So if you were holding these stocks, at least they were able to offset some of the losses from the index names. Moving on to the global markets, the economic numbers last week came in softer than expected. So this prompted a risk-on attitude in the markets. So looking at the S&P 500, this was a great breakout from the 4,080 critical zone that we've identified. So we were expecting a rally. So we expected a rally here. This rally continued here and even broke through that critical zone, right? So this sets up the index to challenge its next critical level here at 4,180 and possibly break out to 4,250 that we have been monitoring for quite some time. For the shortened trading week next week, we may have some thin volumes coming in. We may see a quick bounce before going down, possibly retesting this level here, or some consolidation happening before it continues its rally to 4,180. This rally here is actually primarily driven by the Nasdaq stocks. If we look at the Nasdaq futures here, what a breakout here. This is a very strong resistance level, and this breakout paved the way for the Nasdaq to rally further, right? So if we look at the Fibonacci chart, so one way to estimate how far this rally could go, if it breaks out of this Fibonacci level here, the next potential take profit zone would be here at negative 0.382, and the take profit zone 2 is negative 0.618. If we look at this level here, that's a confluence zone because we saw a resistance level here previously in August last year. We may see Nasdaq possibly in the next 4 days, possibly consolidating accumulation phase here, and then continue on to rally in the next few weeks, going up to 0.38. Now, the rally in the market is mainly driven by technical reasons as well as optimism in the markets in the belief that the Fed may pause rate hikes during their May 3 meeting. Remember that the market thinks that the Fed may have already broken something, in this case, right, the financial sector, and there's less reason for the Fed to hike rates further, and this could be the start of the pause in rate hikes, right? But looking at the dot plot, we can see that only one is in favor of a Fed pause, and most of the Fed members are still looking at a further 25 basis point rate hike. As it stands right now, markets are weighing a 52 chance that the Fed will already pause rate hikes and a 48 chance of another 25 basis point rate hike. But if we look at other indicators, let's look at the 2-year Treasury yields. It currently stands at 4.029%. If we look at the monthlies, right? If we look at the monthlies, it is the first time that Treasury yields have gone down, have reversed, right? So every time this has happened before, this usually signals a Fed rate pause. Now let's add the federal funds rate here into the chart. So historically, right? So historically, this reversal always signifies a pause, right? See, a pause, right? So this is a 6-month pause, this is a 1-year pause, this is a 6-month pause. Now, what is its effect in the market? So if we add the SPX into the chart here, right? So notice that as the Fed, so notice here that during a Fed pause, right? Look down below, right? The market tends to go up, right? Here, a 6-month pause, the market is going up. 6-month pause, the market is going up. It is only when the Fed starts to taper when the market also starts going down, right? So if we are assuming that the Fed will pause rate hikes and keep rates at 5% until the end of the year, so we may see the markets continue to rally throughout the year. So it's quite possible. The earliest that the Fed might pivot would probably be in October or November. So let's see what happens. But as it currently stands, the market is very bullish. So I wouldn't want to risk shorting the market at this point in time. That's it for this week. I hope you found this episode useful. Please like this video, subscribe to the channel for more updates. Take a break from the markets this week, right? Enjoy the holidays. I'll see you again next Monday. Next Monday is a holiday also in our local markets. So enjoy your long weekend. And as usual, good luck on your trades. Manage your risk accordingly. I'll see you after the holidays. Good luck and bye-bye.